Alright, welcome back to MMG. First of all, this is not financial advice. Consult your financial advisor. I'm not your financial advisor. This is more of an educational channel on learning how to trade. And listening to me rant, I could be completely wrong about everything. Uh, Stocks. Extremely volatile, extremely risky. Do not trade. Uh, Trade, but always have your stops in place and have your emotions out. So, it's getting crazy out here. It's the bear party is ramping up. And we just finished July, right? July is usually nothing's going on usually in the stock market, or it's not as volatile. But the Fed, Trump, trade tensions, geopolitical stuff, central banks all around the world, negative yields, just endless the endless QE and money printing is coming. I mean, uh, Europe, guys, if you're not diversified, you can't just do crypto. You're gonna miss out. Mining stocks, at least have some. You don't want to miss out on that. They're gonna explode. I mean, a lot of them are already up by a lot from the bottom, but they have a long way to go. For wherever the all time high is gonna be for them, I don't know, but it's not late at all. Like I said, the party is just getting started. So go to mmginvest.com. Watch that video. That is what to expect. I also have a private group where I share with you guys my trades, so you can see how I trade, and then you guys can learn, and then you guys can make your own trades, and then I also do updates and do more research and stuff like that. So I'm going to talk about a lot of news events. I just had the TV volume on. Kramer was sounding like the Kramer in 2008. And it's funny. I haven't seen him this bullish since 2008. But he is covering his own ass by showing video clips of what he was saying in 2008 when he was having that meltdown. I'll post this in the free chat group of MMG, and then I'll show you guys some other videos of him having a meltdown back in 2008. Basically, he was screaming at the Fed, lower interest rates, start up the printing presses because people are losing their jobs and losing their homes and blah, blah, blah. Which is, yeah, temporarily that's going to stop it, but the long term, that is why we are where we are today, is because of that. They should have let the banks fail. They should have let everyone reap what they sowed, right? If you're going to take out mortgages with teaser rates and ninja loans, I mean, you deserve to lose the home, and it's malinvestment. The cancer needs to leave the body in order for the body to survive. Well, back then, what they did was, I really don't want to use these, but, they just temporarily just gave the patient medicine, and now the patient is addicted to drugs to stay alive, addicted to, I don't know, morphine or whatever, to stay alive, which is, in the end, is going to kill the patient, which is the economy. And that is artificially low interest rates, endless debt and money printing, and endless government spending as well on top of it. So you guys know the story. All right, so where to go? So I'm going to cover some economic events. It's at the point where it's pretty crazy, guys. So central banks are doing record gold purchases in the past 6 months. I can't view this article. Shitting me? I can view it on my phone. Anyways, central bank hunger for gold, 3-year high. In the past 6 months, they've bought more gold than ever before in history. Why is that? Well, they know what's going on. They might pretend like everything's okay and everything's going to be okay, but if they really believe that themselves, and they tell you everything's going to be okay, right? But behind the scenes, they're buying gold hand over fist. And then you have, like, JP, you have other banks just buying silver, physical, hand over fist, behind the scenes. And they've been doing this for years, but they've been really ramping it up in the past few months. And that's probably also helping the gold price break out, because when there's no physical supply, the only way is up in prices. I'm also going to show you guys all the global major currencies versus gold. So stay tuned for that. So, I mean, this is it. Soaring debt. See, that's why we're going to get inflation, all right? It's because of soaring debt. Also, soaring debt versus shrinking populations. The young, the millennials, Gen X, and all that. And this goes true for Japan especially, and for Europe. And eventually China. China is not too far behind. For one, the younger generations do not have these great paying jobs like the boomers, right? How are they going to pay off all of the retirement and all the free crap governments have promised, right? They can't. So what's going to happen? They're going to create inflation on purpose, because inflation erodes the debt and all the entitlements that needs to get paid out. That's why you could bet on inflation, because they want inflation. Inflation also hides bubbles collapsing, like the Australian housing bubble. It is collapsing, but they hide it with inflation because the Aussie is just getting destroyed, the fiat currency. So the prices may stay up for homes a little bit longer, or they might not fall as rapidly, but the value of your currency is falling. Same goes for everything, honestly. So, debt's going to get wiped out through inflation. And this is horrible for the middle class and even the poor. The wealthy, I mean, they're smart. They'll invest in precious metals, right? Or they'll, they know how to move their money around. They'll survive. So, here's a great chart. Consumers versus non-consumers. Now, you have to understand the U.S. Economy is very consumption-based, right? As you can see here, the consumer versus non-consumers versus global debt. Now, the United States, this is why the United States is going to be in some serious, serious trouble in the future, and so will Europe. It's because they're consumption-based economies at this point. They're not producing and making, they're not manufacturing based like China now, right? That's why, China with the new Silk Road and all that, China will probably come out on top, or has a good chance. It's not yet. We'll see, because their bubble's enormous as well. But this is the problem when you have consumption-based economies. So the orange line here is non-consumers. These are your boomers and the people aging. They're not buying things like they used to. The red line is global debt. Look how these are rising versus consumers. Consumers have topped out and it's been dropping, and it's going to continue to drop as inflation picks up. And, and this is an index of this relationship. and it's bottomed out and it's going to go back up, and that's like a major cycle since 1980. It's so that one could argue that's going to create deflation. That is true, but like I said, they're going to create inflation because they don't want the pensions and all that to blow up. They're going to try to keep it all propped up because honestly, they're so afraid of the debt bubble popping. They're going to print, they're going to just keep printing, and what they're hoping is these central bankers and, you know, the control structure, they're hoping for like a Japanese style like stagflation. And they're going to get it, except they're going to get inflation. They're really not counting on that. Or maybe they are, but I mean, they are counting on inflation, but stagflation it's not like runaway inflation. It's just steady, like 10, 15% inflation every year, over a year. But eventually it's going to destroy all the companies because they can't operate in that type of environment. And then earnings, revenue, it's just going to implode, and the stock market's going to go down no matter what. And then everyone's retirement's going to just freaking evaporate. Also, the demographic shifts, right? I mean, this is what happens when women go to work. I'm serious. And when the good times are good, people want nice things and they're living comfortably, they're going to college, and they're having less kids, but because of inflation over the past few decades, it takes two to like make ends meet, and kids are expensive. So the woman works, the husband works, and they might have one or two kids, but they're barely replacing themselves population wise, or they're not replacing themselves. They're only having maybe one kid. And normally in a healthy society and empire, you're having more kids than, so you're having more than two kids. You're not just replacing yourself, but you're adding to the population. And what happens is the population starts decreasing in the end. So when the population decreases, well, guess what? I mean, not only do you have less people to pay off all the entitlements and debt that has accrued from earlier generations, but there's just less economic growth because there's less people, less buying, less making stuff for less people, right? It's literally that simple. And then, one might argue, well, third world, their populations are booming. It's true, but the problem is they go to the first world and then they want entitlements and free shit. And then, also IQs. You need a high IQ society to have a high functioning, real productive society and output. And it's just the matter of fact. So I'll post this in the free room as well. Mission accomplished. Rate cut odds surge after tariff announcement, just as Trump wanted. Alright, listen. Trump, the trade war is pretty much, it's in full blown. China's not backing down. Trump, some might argue that Trump is purposely antagonizing the trade war and making it worse, so the Fed fully capitulates and really starts lowering interest rates. So the stock market goes higher, cheap money, right? And we get like the stock market melt up that I've talked about, and he could ride that wave into 2020 and get reelected. And then, I don't know. I mean, he has a plan for when shit hits the fan, I hope. He does, because he talked about it accidentally on an interview in 2016. He talked about default. And I think that's his plan. And he's also just not backing down from China. He literally said, I don't care if all trade ceases with China. I mean, the implications of that is really bad for a lot of these FANG stocks. Well, Apple at least, like a lot of major corporations for the U.S. because U.S. corporations are international corporations. They're not really U.S. based anymore. They barely even pay U.S. taxes. So there's just a lot of moving parts. It's like it's like everyone is playing with fire and trying to keep the party going. But I think investors are really getting nervous. I mean, there was a bunch of calls on the Kramer show going in, and you could tell that these boomers, they're getting nervous. They're like, should I take profits from the stock market? Of course, Kramer's like, no, no, no. Buy all the dips. Buy, buy, buy. And nothing changes. But, so the Fed's probably going to capitulate some more because the market took a shit. Literally took a shit during the FOMC on Wednesday, and it's been falling ever since. Will we get the melt up? I honestly don't know, guys. I just be prepared for both, right? I don't care because I'm not really holding any. I'm not like long any stocks besides metals at this point, so I don't care if the stock market melts up, because if the stock market melts up, mining stocks will go even higher, and then if the stock market falls, well, gold and silver and mining stocks are going to go higher. It just doesn't matter because they're going to just keep cutting rates no matter what. They're stuck. The central banks are all cornered, and they have no choice but to keep cutting rates and keep printing. If they raise interest rates, metals are going to go higher anyways because it's going to cause a Great Depression. Like global Great Depression, like 1930s styles, I believe. Could be wrong, right? All right, so, yeah. Dow drops 160 points on trade war fears, heads for second worst week of 2019. Like I said, overdosing on crazy pills. I mean, every central bank is just... They're printing... It's almost getting to the point where their easing policies are going to be at 2009 levels with the U.S. stock market near all-time highs. I mean, I think they're really scared to death of what could happen, because they're all going to lose power when the shit hits the fan. Europe promises more stimulus 7 years after Draghi's promise for stimulus. So Draghi 7 years ago said he'll do whatever it takes. Well, you know, Europe's not really doing any better. That's why France is burning. And, you know, Europe's not really doing all that great. They're not doing any better than I believe back then in 2009-10. And they're just going to, you know, more stimulus. More and more stimulus. Manufacturing index hits 51.2 in July. Construction spending down 1.3% in June. Manufacturing looks bad. So, payroll rise 164,000 as labor force sets a record high. Well, there's just people working like 2 to 3 jobs. Just more and more people. But, you know, I do believe some more people are going into the labor force. It's just... I mean, you see these at the peaks, so it's not surprising. Alright, here's economic calendars. Speculative net positions have risen. Well, speculation. Gold speculative net positions have risen. Oil has dropped. Factory orders are down. Factory orders, transportation stayed the same. A huge freight companies like going out of business. That's really bad. Those are all the semis on the highways that are carrying goods. So what does that tell you? Michigan 5-year inflation expectations, they're slightly lower, which is weird. ISM New York business conditions have actually fallen. Yeah, Michigan consumer sentiment has stayed the same. Manufacturing payrolls are up. Government payrolls are up. That's actually a net negative. Because that just takes away from the economy. Average weekly hours has fallen. U6 unemployment has risen. Participation rate is actually up a little bit. Average hourly earnings month over month is stayed the same. Exports have fallen, and so have imports. So I think that's really important that no one's really paying attention to. When your exports fall and your imports, that's telling you the economy's contracting. Unemployment rate stayed the same. Private non-farm payrolls has fallen. Trade balance, it's getting worse. Average hourly earnings, it's actually up. So people are getting raises, but inflation, it's still not keeping pace with inflation. Let's go to the charts. All right, so the stock market dumped massively. Here's the S&P 500. It hit support but blew through it. The 2900 support. So it's really not looking good, guys. Let's go to a weekly. Actually, let's go to a monthly. Let's do some trend following, so you guys learn something. Here's the S&P 500 monthly chart. You don't want to see this. Now, remember that broadening top I was talking about? If the market continues to fall, and we make a new monthly low here, or yearly low, or near it even, that'll start looking like a broadening top. But we're far from that. I mean, the market would have to fall like down to 25 in the 2400 range on the S&P 500 on the monthly here. Right now, it's neutral. It could go either way. It could really go either way right now. It's actually probably better if the market falls down to like 2700 and then the Fed starts easing more and then it goes higher. So that's very possible. And I think that's what Trump probably wants as well, going into 2020. And then we start making new highs once the Fed cuts rates. The thing is, earnings season in the fall is coming, and if companies across the board and the economic data starts really weakening going into 2020, and earnings fall, revenue, everything, I don't know if the market will buy it. That if the Fed keeps lowering interest rates, that the stock market will go higher, because people might start panicking, and that'll be the top. So I don't know yet. It would probably be safe to not trade, and well, you could trade, but to see what the market does towards the end of 2019. To see if it breaks major support levels, and because chasing the melt up might be incredibly stupid, because it might be very short-lived as well. So even if we get a pullback for the next few months until 2020, and then the Fed really starts cutting rates, and then the market goes higher, and we get the stock market melt up, start making new all-time highs, it might, chasing that is extremely risky. Let's look at the weekly. So a lot of support at 2700. So I'm thinking 2,700. We might go retest that on the S&P 500, and the Fed's going to capitulate, and then it'll break up higher, and the stock market melt up. Russell 2000, 1,400 would be a 23.6% fib retracement. Honestly, I don't think the Russell's gonna hurt as much on the pullback as much as S&P 500. FANG stocks, on the other hand, let's take a look at that. It's a daily chart. I'm not sure about the FANGs. I wouldn't be holding any of them personally, and I'm not. Let's take a look at here's crude. I mean, it's not doing much. It's still, oil's still cheap. Let's look at NASDAQ. Here's NASDAQ composite. It's on 8,000. So if it breaks lower, below 8,000, support around 7,500. I'm gonna have to make a separate video just looking at stocks. Either way, I think stocks are still gonna continue to fall for at least next week. All right, let's look at gold. So here's the gold ETFs. They've been skyrocketing for the past few weeks. Here's gold. It broke out of the cup and handle. So gold has had massive rebound from the Fed minutes. Huge. I mean, look at this. It rallied from 1,412 all the way to 1,462. That's huge. It's a $50 rally. Or reversal. So how does gold look on the longer time frame? Just from a TA standpoint. Fundamentals, I think gold looks great. On the monthly, it's on a 3 count. So we have, and this is a very bullish pattern here with the candles. So according to the TDI indicator, we're going to get a 9 count to the upside on the monthly. So in the next 6 months, 6 to 5 months, we could, I mean, we can see gold up around 1,600. And if gold gets above 1,500 in like the next month, these mining stocks are going to explode. They haven't exploded yet. Some have, but not many. Not the entire sector. The entire sector is still extremely oversold. But to put it into perspective, the mining stocks, they're not even at 2016 levels. So in 2016, we had a nice mini like bull run. They're still, the mining stocks are still below the 2016 highs by a lot, some of them. So there's a lot of upside on the mining stocks. Even if gold pulls back like 20, 40 bucks, I think everyone's going to buy that dip for the mining stocks. So it's still looking very, very positive for gold. Let me put gold on this chart. Here's the weekly. We had there was supposed to be a correction, but we blew past that because of the Fed. Let's put on a monthly. Yeah, I mean, it looks positive. Any pullback, I will buy every dip. especially if the price breaks above 1500. I mean, anyone who is questioning the new bull market in precious metals will finally start FOMOing, especially once the price gets above 1500. At that point, you really can't ignore it. Now, these moving averages, yeah, I mean, they're starting to, on the monthly here, they're starting to really, but listen, it's fundamentals at this point. So once the 52 week, or not week, once the 52 month crosses over the 100, back above it, it's going to just continue to rally, probably past the all-time high of 2011. Let's take a look at the weekly. Yeah, look at all these moving averages crossing above one another. Now there's going to be pullbacks, but it might be once we hit 1500. It might be now as well, but as the stock market keeps falling, everyone's going to anticipate the central banks lowering interest rates and printing, and maybe starting up the printing presses. So gold just might, I mean, it's not might, I think it's likely to just keep going higher and higher, and people aren't going to believe it. Right now, I'm pretty much all in on metals and mining stocks. And if there's a dip, there's a dip. I'm just going to buy the dips. All right, let's take a look at fiat currencies versus gold. All right, so this is gold on a weekly chart. So here's the dollar versus gold. Dollar's been pretty strong lately because it's the nicest shirt in a dirty hamper. It's the cleanest shirt in a dirty hamper because all other fiat currencies are falling versus the dollar. You can see the dollar's been rallying, but so has gold, despite. And I told you guys, I've been saying this for like over a year. We're probably going to see gold go higher with the dollar going higher, and it's not going to make sense to people. That's why they're not going to buy, gold, and it's going to mess with them. But eventually they will. Now, once the dollar starts falling again, and it will eventually, it's probably going to be when the Fed keeps cutting rates. Then gold versus the dollar and silver versus the dollar is just going to take off like a rocket. All right, let's take a look at the euro versus gold. Look at that. The euro's getting destroyed versus gold. Destroyed. The euro's been falling against the dollar as well. Let's take a look at the pound versus gold. Annihilated. Annihilated. Look at that. It's all the way down here. It's the red. It's the red line. The orange is gold again. Just getting annihilated. And it's probably because of Brexit as well. Japanese yen versus gold. Now, the Japanese yen, it's actually consolidated here, and it looks like it's going to break higher, which is interesting. But it's fallen a lot versus gold. Especially since 2016. Let's go back to the pound. I just want to see that again. The pound has been getting pounded since its high was back in 2007. In 2014, it's been just falling versus gold. Just falling since 2014. Actually, let's go back to euro and see that again. 2018, the euro really started falling versus gold. Its high was back in 2008. All right, let's look at the Aussie. It's, Australian currency here is definitely just dropping hard. Very, very hard compared to gold. It really started tanking 2017. You know, I think the housing bubble in Australia has, and they're debasing of the currency to keep it, you know, up afloat. It has a lot to do with it. Its all-time high was back in 2011. So, you know, when I look at these charts, if you're not a U.S. citizen, you live somewhere else, gold and silver is like at all-time highs compared to your currency, probably. It's not at all-time highs, but well, maybe it is. I mean, for a lot of them, I don't know. I don't care. But your currency and your purchasing power has been getting destroyed in the past couple years versus gold and silver. So the bull market for you guys started 2 years ago. Because you get paid in that fiat. Wow, the Canadian dollar, or whatever it's called, annihilated. Look at this. It's the red line. It really started dropping 2017. Its all-time high was, I would say, 2011 again. Alright, Chinese yuan is also falling versus gold. So the only fiat currency holding up against gold is the dollar, and gold is still outpacing the dollar. So the dollar is still losing value versus gold, but the dollar is very strong compared to the rest of the fiat currencies around the world. So, yeah. When the dollar starts falling, it's going to be crazy. So, there you go, guys. Alright. I think that's it for today. Smash some likes, leave anything in the comment section. Let me know what you think. Please share my videos. It's the only way my channel grows, and I'll continue to do this, and my battery's low. Until next time, guys.